Good morning. Welcome to the investment meeting of the Teachers Retirement Board for January 6, 2022. I'll start by calling the roll. Thomas Brown,
Here. Good morning.
Cindy Collins,
Here, good morning.
morning. David Kazansky,
Present.
Brad Lander,
Here.
Deborah Penny.
I am here.
We have a quorum. I think the controller wanted to give us a greeting.
Thank you, guys. So, are you okay? Fine.
Sure.
Yesterday, we had a hard time hearing on the Zoom. Maybe
Right.
you guys might have better audio than the police pension fund. But good morning. It's such an honor to be with you guys. You know, I think I started by saying this when I had the honor to meet with David and Tom and Jeb. But my mom was a lifelong public school teacher and guidance counselor. She's actually retired now from the public schools that she worked for 40 years, although she still volunteers to teach mindfulness to like kindergartners and first graders and second graders. She was kind of an amazing guidance counselor. And of course, you know, whatever, she's lucky to have been I grew up in St. Louis. She's a lifelong union member and has her pension. And so, you know, the idea that as stepping into this role as controller, you know, I'm kind of in that tradition. It just feels very personal to me. Both my kids, who are now 18 and 22, went pre-K to 12 in the public school system. And, you know, there's just like the love you have for your elementary school and what it means, like that your kids go in, you know, as these like anxious, don't know how to read or write, or, you know, like don't have the same level of social skills and come out these like beautiful human beings. Like they're extraordinary places. So I feel enormous love for the public school system and for the teachers and all the staff in them who just do this like amazing job. And it's tough work, even when you're not in a pandemic. We'll come back to the pandemic in a minute. It is not the most highly compensated work in the world. You'll be shocked to learn for where it is like relative to what society ought to value, right? If you ask most people, what are the most important things, like the professions we should value, just no doubt teachers would be way up at the top of the list. But at the very least, we say, you're gonna work a long time in these schools, we're gonna pay you okay, there'll be some other benefits, you're gonna have a good pension to retire on. Like, that's a pretty sacred trade that we make. And I really feel it very personally. So to get to step in here with all of you and make sure we're guaranteeing that for the long term, so that all of your members who are already retired and that are working today know that's there. I feel it like as a heavy, but also really wonderful responsibility. I'm just super excited to step into it with you. I know, and you know, it's no secret that we are in the process of figuring out how to strengthen the relationships of trust and support and work together between the Controller's Office and the Bureau of Asset Management and the labor trustees and the funds. And I'll just say, like, I'll welcome that. Like, it's our job to try to figure out how to do it as well together as we possibly can. And I know we share a common goal, right? Like, the goal is how to invest the resources that we have the most efficiently in a way that guarantees the most value for the long term. And that's what we all want. And I really believe we'll be able to put kind of some of the history and some of the politics aside and say, let's roll up our sleeves together and find the best ways to do that. So that's why I wanted to be here today in person. I'm really happy that Mike Haddad, as CIO, is here today in person. I'm thrilled that Allison Hirsch agreed to be the trustee, the assistant controller for pensions. As you know, she's somebody with a deep history, both in the labor movement and in government, and including with some experience working on the school. So feel really lucky there. And we have all learned a lot from John Dorsa, so we're delighted that he, yeah, so whatever good and bad, well, I don't know, this is, I don't want to blame him for everything, but probably the things that we know. So I know there's several folks here who worked in the controller's office, so that's fun too. This is like a good long like tradition of collaboration, and we're looking forward to both continuing that long history and confronting some of the more recent challenges just as honestly and openly as we can, so we achieve that goal of like finding good investments, making wise decisions together, thinking about the long term as fiduciaries, both as collaboratively and responsibly as we possibly can. So great to be here. I'm not going to stay the whole time, but I will stay for a little bit, and then you'll be obviously in good hands with Allison and John and Mike.
Thank you.
Welcome.
Okay, thank you, yes, and Allison, we welcome you to our board family. That is great, it's an honor to be here. And I see on Zoom, we have Madam Actuary Sherry Chan, and it is with great sadness I say that Sherry is leaving her position tomorrow. So today is the last time that she will be with us. We thank her for her service. She has been a wonderful actuary on behalf of New York City. We appreciate everything that she's done for us. Oh, and she's back. We appreciate you, Sherry Chan, and we thank you for everything. We wish you only wonderful things in your new endeavors. And with Sherry leaving, we have Mike Samet, who will be the deputy who will be taking her place while we start a search for the New York City actuary. So Sherry, if you want to say anything, we're happy to hear from you.
Yeah, thanks, Deb. I just wanted to thank everybody on this call because I think, I look back to my almost 7 years in New York City, and it's been incredible. I've learned so much, and my career has, catapulted to levels that I wouldn't have even dreamed of before this opportunity. And, I thank everybody here because everybody did do a part in helping me succeed in my role. That everything that I've learned to date and achieved to date, everybody had to do with that because, it was everything from my staff helping me to, deliver the materials that the board needs for me to be able to present with, such accuracy and confidence that the work is of great quality. So I thank some of my staff that's on here right now. I thank the board members because, with, no pain, no gain, right? It's, you challenge me to do my utmost best in the boardroom, and every experience that you've given me is something that will help me in my future. And then just the ecosystem beyond that too. I know Rokatan's here, and we've worked together on some projects throughout the term that I've been here. And again, I just thank everybody, and I hope to keep in touch, and I'm always going to be in LinkedIn, so you can definitely find me there. And congratulations to the new comptroller. Sorry our terms didn't overlap that much, but I do look forward to observing you and your success from the sidelines.
Thank you. Thank you for your service to the city. I've heard, whatever it's we really, really appreciate it. So good luck in your future.
Thank you.
Thank you, Sherry.
Okay, next I just wanted to point out that you have the calendar for each of the board meetings, both the investment meetings and the regular meetings. I want to point out that the teachers' retirement system, both on the investment meeting and the board meeting, regular meetings, does not meet during the summer months, July and August. They come back in September, and that's when the first you'll have the calendar ends in June. Liz, administrative system, will make sure you have the calendar starting in September of 2022 for the next year for the meetings with the board. So I just wanted to point that out. So here are the dates. So you should probably mark them down because they are in place and have been for a while. And again, you get the summer off. So thank you.
Thank you, Patricia. Okay. So we're going to start off with Mike Haddad, who is the interim CIO for the Bureau of Asset Management. Mike, do you have anything for public agenda?
We do not.
Okay, well, thank you. And a happy new year. So then we go to our passport funds, and Robin Tellish, do you want to start, or is Mike going to start with us?
Mike Fulvio will begin. Thank you.
Okay, Mike Fulvio.
Good morning, everyone. Happy New Year. We'll begin with the November performance for the passport funds. Everyone should have received that in the materials that were circulated. And it feels like a while back now, but as you'll recall, November was a down month for equities in the US and abroad. What started out as a positive month for many markets changed when news of the discovery and the spread of the Omicron variant became really a dominant headline going into the end of the month. And so what we saw was in the last couple of weeks, those early gains were more than erased. And the US, for example, ended the month down about 1.5%, emerging markets down about 4%, and non-US equity markets down about 4.7%. And what we saw in the passport funds, as you'd expect, largely reflected the returns we saw in the markets for that period. So you can see at the top of the page here, the diversified equity fund was down about 2.4% during the month, roughly in line or slightly behind its benchmarks. What I'll note there is what we did see was mixed results among the active equity managers for the month, but still quite strong year to date. So certainly positive there. For the balanced fund, that fund you can see for the month was down about 1%. The international equity fund down about 4.5%. Beyond that, the sustainable equity fund, November was a tough month for that fund, which lagged its benchmark by almost 200 basis points. But what you'll note as well is that still year to date through November, that fund was still ahead by nearly 400 basis points. And then for the index funds below that, as you'd expect, tracking their benchmarks quite closely, with the US index fund down about 1.4% and the international equity index fund down about 4.3%. I'll pause there and see if there's any questions on November before we make a few comments on December.
Any questions for Mike for November?
Patricia.
Nope, hearing none. Guess we're ready for December.
Great. Everyone should have that one pager with the preliminary market performance for December. And Robin's going to go into a lot more detail about what we saw in markets for the full year. But I'll just comment at a high level. December was a much better month, as you can see from the numbers in the first column on this page. So market returns positive in spite of continued concerns around the surge in the Omicron variant and the surge in case numbers. So the US equity market as a whole was up almost 4% in the month of December. And abroad, we saw over 5% for developed equity markets, developed ex-US, and emerging markets up almost 2%. So pretty strong numbers. Robin's going to go into the full year, so I won't read those off the page, but I will say, given what we saw earlier in the year and the strength we saw in December, it was a pretty good year for equities across the board, with the exception of EM, which was down about 2.5%. So I will pause there and see if there's any questions. Otherwise, I will turn it back to the chair.
Any questions for December? Okay, hearing none. I guess, Robin, we're ready for you.
Good morning, everyone. Thank you. Yeah, so we thought given that we're having this first meeting of 2022 so shortly after year end, that it might be helpful to provide some retrospective of the last calendar year. So much news, so much information being thrown at us all year long, obviously not just about the markets, but about economic developments, about the pandemic, that we thought it might be useful to take a few minutes and look back at the capital markets over the past 12 months. So if we can turn to the first slide in that deck, the capital market review, we're just looking at calendar year returns for 2021 in this first bar chart. And you can see that, and we're looking at the S&P 500 as the proxy for US equities. So primarily large cap US equities. You can see almost up 29% for the calendar year. Non-US developed market equities up about less than half of that, up 12%. And as Mike mentioned, emerging market equities had modest losses for the calendar year. So it's distinct difference across geographies during 2021. We can look at fixed income asset classes, whether it's core fixed income, long duration treasuries, long duration credit. Investment grade fixed income had incurred modest losses during the year as we saw interest rates rise. With below investment grade high yield, as spreads came in, we saw modest increases, return of over 5% for the US high yield asset class. And then if we look to the right of the slide, you can see that REITs had an extraordinary year, up 43%, as folks were looking for yield alternatives, as inflation fears increased valuations. And we can also see the commodities led by energy had a strong year in 2021. So again, takeaway, very strong US equity markets, double-digit returns for developed non-US equity markets, investment grade fixed income, modest losses as we saw interest rates rise. If we go to the next slide, of course, the constant drumbeat of inflation has been a presence in the news for at least the last half of this year. And we can see US on the left-hand side of this slide, we can see calculation of US CPI year over year. And we can see that the US in 2021 experienced its highest level of inflation in nearly 40 years, as headline inflation CPI increased to almost 7% as of the end of November. So significant increases we can see in inflation. We can see that outside the US, there were pockets of even higher inflation, particularly in some of the emerging markets. See Brazil, almost 11%, Mexico, over 7%, and Russia, over 8%. So this continues to be a strong factor in the capital markets. Our expectation, when I say our, Rotan is part of Goldman Sachs, as you know, so Goldman Sachs's expectation continues to be that while more persistent than expected, inflation is expected to moderate over the next 12 to 24 months as some of the supply chain bottlenecks unwind. If we turn to the next slide, the other big news in the capital markets during 2021 were the movement of interest rates moving higher. We can see on the left-hand side of this slide, 10-year treasury yields. And as economies reopened following 2020's events with the pandemic, you can see that there was an increase in interest rates for most developed market countries. So we see on the right-hand side, not only US rates, so this is an interesting bar chart on the right-hand side. You can see at the start of the year, 10-year treasury yields were at 92 basis points. They rose to a peak of 1.7%, fell to 90, a little below 90, a little above 90 basis points, and then ended the year at 1.5%. We see, interestingly, on the right-hand side of this bar chart, negative yields continued despite the increase in government bond yields in some developed markets such as Germany. You can see that we continue to have absolute, this is not real yields, this is nominal yields. And in Germany, nominal yields continue to be negative as of year end. If we turn to the next slide, and I'm going fairly quickly, would welcome any questions or comments as we go through these slides. So increases in interest rates have, as you can see on the next page, delivered negative returns for core fixed income, investment grade fixed income. So we're using the US aggregate bond index as the measure of investment grade bond returns in the US. And you can, and as we note on this slide, that the loss of 1.5% for the year places the aggregate as just the fourth calendar year loss for this index since its inception in 1976. So very unusual year in investment grade fixed income, but still fairly modest losses, minus 1.5%. And over the history of the index, which began in 1976, this is just the fourth calendar year loss for that benchmark. If we turn to the next slide, lots of small type on this slide, but I thought it, and I'm not, certainly not going to read it to you, but I thought it was very interesting just to put the 10-year treasury yield in perspective. So this shows the 10-year treasury yield back to the late 1700s. And of course, I'm not sure that's a particularly relevant comparison as we go back hundreds of years, but you can see the historical lows that we're facing as we're awash in this sea of liquidity and very accommodative monetary and fiscal policy. So we continue to be, despite the increases in interest rates over calendar year 2021, we continue to be at historical lows, which has significant implications for our outlook for the pension fund and the passport funds fixed income holdings. And we can talk about outlooks at the next investment meeting. But I thought that this was an interesting way to put current government bond yields in a historical context.
I know that.
And then, yes.
Communicate that there were many more panics before the creation of the Federal Reserve.
Yes, good point. If we go to the next slide, just want to briefly note what's happened to commodities over 2021. So we can see that price of oil moved up sharply during the year. So oil markets were up, depending what measure of oil markets you use, up about 50%, including natural gas. Precious metals declined despite concerns over inflation, which is interesting because the common wisdom is as inflation expectations rise, precious metal prices go up, but that did not happen during calendar year 2021. And we can see some other commodity price increases. But again, major message here is rising price of energy drove commodity indexes higher during 2021. And then on the next slide, we note some other benchmark returns that I thought might be interesting. And we talk a little bit about the dispersion of US equity stock prices. So if we look on the left-hand side of this slide, we can see that some other markets we read about, Bitcoin, for example, gained 60% during the year. We've already talked about crude oil. We can see that large cap stocks did outperform smaller cap stocks. And again, towards the end of this list of benchmarks, we can see that investment grade bonds incurred modest losses due to interest rate increases. I think it's interesting to note that the dispersion of returns within the US stock market was actually slightly below average for 2021, but the largest cap growth stocks, so the FANG stocks, there's a typo here, it should be FANG stocks. So when you think about the leading tech stocks, Facebook, Amazon, Apple, Netflix, Google, they continued to dominate the US equity market, gaining about 37%. And because of their stock price increases, those 5 stocks within the S&P 500 represent almost a quarter of the aggregate market value of the S&P 500. So continued dominance of those large cap growth stocks, although in the fourth quarter, we did see a rotation towards value stocks. And then finally, I wanted to note private markets. I'm sure we'll be hearing much more about private market flows and results as the board reviews pension fund results for 2021. But I thought that this discussion would not be complete without reference to private markets and just the record-breaking levels of transactions and valuations, particularly in private equity during 2021. So again, I'm sure we'll hear much more about the details of private market results for the pension fund in subsequent meetings. And with that, I'd like to conclude my remarks. We have a lot more detail in the appendix, but happy to entertain any questions or comments.
Any questions for Robin? I don't think so, but thank you. That was great. A lot of information there. We appreciate.
My pleasure.
Okay.
I'm resisting my temptation to ask about the panic of 1897.
All right, and then I think we are finished with public session. If there's anyone else, the people who joined us in public session, we thank you. We will be back after our executive session. And Happy New Year to all of you if you decide not to rejoin us. Do I hear a motion to go into executive session?
So moved.
Thank you, Mr. Brown. Do I hear a second?
Second?
Thank you, Mr. Kazansky. All those in favor, please say aye.
Aye. Aye.
Any opposed? Any abstentions? Okay, we're moving to exec. Okay, we are back. Susan Stein, would you like to update us?
Absolutely. In executive session, we received an update on a contracting matter. We received presentations on 2 private equity investments. Consensus was reached. We received an investment presentation on 1 real estate investment where consensus was reached, and we received an update on certain transition events.
Thank you. Does anyone have anything else for public session? Any comments? Okay, hearing none. Do I hear a motion to adjourn?
So moved.
Thank you. Here, Mr. Brown, do I hear a second? Second. Thank you, Ms. Hirsch. All those in favor, please say aye.
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 Any opposed? Abstentions? Okay, have a happy and a healthy new year to all.
Thank you.
Thank you
Happy
for
New Year.
joining.
To you.
Bye.
Bye.